Hi, it's Nero here from Investment Rise, and as I record this video in early May, it certainly looks like, in Australia at least, the worst of the coronavirus is behind us. Kids are being let back into schools, the economy is gradually opening up, people are back at work, even real estate auctions are now being allowed to happen again, open inspections are now happening, and so the question is now the right time to buy? Because over the last month, throughout the month, especially of April and even March, there were a lot of doomsday people who came out and said, the market's going to crash, you want to wait, there's going to be great bargains to be had. And for those of you who might have seen some of my recent work, I said, you need to sort of discount a lot of that rhetoric, a lot of those, people looking for headlines. You need to even discount some of the data that's coming out because the number of real estate transactions happening in the marketplace had reduced significantly. For example, in Sydney alone, the number of real estate transactions, the number of houses being bought and sold had reduced by 60%. So when you have such a low data set, the conclusions you can make from the data are severely flawed. However, after just 1 week of the economy being opened up again and real estate auctions and open houses happening again, there is more demand for real estate than ever before. People are back out in force. And so for people who are trying to time the market, this is not something I'm a fan of at all, because I believe that when you're buying real estate, you're buying for the longer term. And so what you're really buying is prices in 5 years' time in today's dollars, or 10 years' time in today's dollars, whatever your time frame is. So with that in mind, however, yes, because of the uncertainty, a lot of people have sort of wanted to wait. But I think if you keep waiting, you're going to miss the next boom that I've been talking about, because I really believe it with the record low interest rates that we have right now, with the amount of liquidity or with the amount of extra money that the Reserve Bank has pumped into the economy. I believe that in very good quality suburbs, you're going to see a really strong price rise. So I guess the message is, now is the time. If you've been sitting on the sidelines waiting for the bottom of the market, it's either right now or you might have already missed it. So you don't want to be waiting any longer. However, let me caution you, there is a new danger for property investors. Not so much home owners, people who are buying their own home, no, but for investors. And it's this: you really need to do your research to understand the vacancy rate of the suburb you're looking to buy in. All right, because there are going to be some long-lasting hangover consequences of the coronavirus epidemic, because it's not over yet. And one of the things is, yes, the economy has been badly impacted. Odds are that we may have a recessionary environment, yes, but more importantly, there are many industries that have been badly affected and a lot of people are out of work. So what does that translate to for you as an investor? It means that at a time right now when real estate transactions are going up, more and more properties are coming on the market. There are more properties on the market, but there are fewer people looking to rent in many areas. Not all, but many. So you as a property investor need to really do your analysis and ensure that you're buying in an area with a low vacancy factor. For example, if we look in certain suburbs like Ultimo in the city of Sydney, vacancy rate 8.2%. Now, if you've watched any of my past videos, you know that we look for suburbs with a vacancy rate of 3% or less, which is where we're looking at suburbs which are undersupplied, which means there are fewer properties available for rent than potential tenants looking for properties, right? So you want there to be more tenants than available properties. But when you look at a suburb like Ultimo with this sharp U-turn up in vacancy factor and now seeing a record 8.2%, sure, the long-term capital growth prospects might still be okay, but if you're buying something right now that's going to be rented, right, you want it to be rented right now, for the next few months, you're really going to struggle to get a tenant, and you're certainly going to struggle to get the high rent that you might expect. Okay, so that's just one suburb. Let's look at some of the others. Westmead, a really good quality suburb, especially with the Westmead Hospital, yet a vacancy rate now of 5.1%, oversupplied. What about Burwood, inner city suburb? Vacancy rate now rising steeply to 7.4%. So, okay, so these are areas maybe closer to the city or closer to a CBD, like the Parramatta CBD, for example. But what about someone like Schofields? Vacancy rate 15%. That means 1 in 6 properties are currently sitting there vacant. And it wouldn't surprise me if that vacancy rate actually rises because it's dropped from where it was a few months ago. So you really need to do your research because as an investor, yes, you want capital growth, of course, but you want to ensure that your cash flow is not impacted. You want to ensure that your lifestyle is not impacted, right? And you want to make sure that you are doing everything you can to allow yourself to get one property that then serves as a stepping stone into the next property. But if you keep buying properties in areas, even if you just buy one property in an area where it's hard to get the rent or the rent doesn't come anywhere near covering the mortgage, it's going to impact on your ability to grow your wealth and achieve your financial goals. Look, I'm not saying that you're not going to get growth if you buy just one property. And if that's your goal, so be it. But if you're serious about building a portfolio, you need to really look at the rental returns, how easy it is to get the property rented, along with the capital growth projections as well. And Melbourne, for example, was the only capital city in April to show a price reversal. So prices actually dropped in Melbourne, whereas all the other suburbs, all the other capital cities held their value and even rose slightly. And the rental returns in Melbourne right now are the worst in the country for all the capital cities. So you've got to ask yourself, is really now the time to buy in a city like Melbourne, for example? So yes, there are some great opportunities. Yes, I'm extremely bullish about the property market. I do believe that we are on the verge of a new boom. And yes, I think now is a great time to get in. But I will caution you, you cannot buy blindly like maybe some people have done in the past and got lucky. You can't necessarily just buy an off-the-plan unit or a 2-bedroom unit in an area that you might know without actually doing your research. But if you can do your research, if you can get the right advice, I strongly believe that 2020 could be the start of a really good boom cycle in property and the start of your ability to be able to accelerate and achieve your financial goals. Hey, thanks so much for watching. If you found this video valuable and you're thinking you might like my help to help you find an investment property, then head on over to NiroCall.com. That's Niro, N-I-R-O, NiroCall.com to discover our unique 5-step process that's helped my private client group purchase now well over $66.2 million worth of property. And then if you like what you see, you can book in for a half-hour phone consult with me personally. Either way, thanks again for watching.